Hi everyone, welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect and your financial growth. The bank promotion exam 2025-2026 are your golden opportunity and I'm happy to make sure you grab it with both hands. In this journey, we'll learn smart strategies, master important topics and tackle questions just like the exam demands. Remember, success does not come to those who wait, it comes to those who prepare. So let's start today. Prepare smartly and make your promotion in 2025-2026 a reality. Welcome to part 17 of my Path to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear practical sample answers about case studies and group discussions to help you climb the career ladder faster. The subject, some case studies. Previous case studies link available in description. Study the missing nomination. Scenario: a customer, Mrs. Kapoor, purchases a life insurance policy through your branch. The specified person in a hurry to meet his monthly target forgets to draw her attention to the nomination facility. Mrs. Kapoor passes away in an accident a year later, leading to complications for her legal heirs in claiming the policy proceeds. Question: what was the mandatory process missed by the SP? What is the regulatory basis for this? And how should the bank handle the situation now? Solution: mandatory process missed. The specified person failed to inform the proposer, Mrs. Kapoor, about the nomination facility and encourage her to avail it. Regulatory basis. As per policy, which references Section 39 of the Indian Insurance Act 1938 and IRDAI, Protection of Policyholders' Interest, Regulation 2017, makes this a mandatory step while sourcing a life insurance policy. Handling the situation. Immediate assistance. The bank's principal officer and TPPD must immediately assist the legal heirs in liaising with the insurance company for claim settlement, providing all necessary documentation. Internal action. Take disciplinary action against the SP for this grave omission. Systematic fix. Reinforce training for all SPs on the criticality of the nomination process to prevent recurrence. Study the cash transaction. Scenario: a walk-in customer without an account in your branch wants to invest Rs 75,000 in a mutual fund. He offers to pay in cash. The branch staff, eager to meet their business target, are considering accepting the cash and depositing it through the office account to facilitate the transaction. Question: as the branch manager, what to do? Advise your staff. Justify your advice based on the policy. Solution: advise. Strictly advise the staff not to accept the cash and not to route it through the office account. Justification based on policy. As per policy of the KYC guidelines clearly state, for transactions of rupees 50,000 and above, the payment must be by debit to the customer's account or against a check. No cash transactions to be done through office accounts for sale of third-party products. Correct procedure. Politely inform the customer that as per banking rules, large cash transactions for third-party products cannot be accepted. Encourage him to open a savings account with the bank or provide a check, demand draft for the investment. Study the conflict of interest. Scenario: the bank has tie-ups with 9 life insurers. A customer seeking a retirement plan meets with the specified person. The SP primarily recommends a product from Star Union Dai-ichi Life because it offers a slightly higher commission to the bank, even though a product from LIC might be a marginally better fit for the customer's stated needs. The SP does not disclose the difference in commission. Question: identify the breach in the code of conduct. What should the SP have done instead? Solution: breach of conduct. This is a breach of the fiduciary duty to act in the best interest of the customer and a violation of the code of conduct for corporate agents. The SP must recommend a product based on the customer's needs, not the bank's commission. Next procedure. Disclose. The SP should have disclosed the list of all life insurance the bank is tied up with. Provide details. Provided details such as scope of coverage, terms, and premium for suitable products from multiple insurers. Disclose commission. If asked by the prospect, the SP should have disclosed the scales of commission. Need-based recommendation. The final recommendations should be based solely on suitability analysis and what best meets the customer's need for buying insurance and affordability. Case study. The unauthorized referral. Scenario. A retired bank employee, now running a small consultancy, approaches the branch. He offers to refer his clients for insurance and mutual funds in return for a referral fee from the commission the bank earns. Question. Can the branch entertain this proposal? Supportive answer with a relevant policy clause. Solution. Answer. No, the branch cannot entertain this proposal. Relevant policy clause. As per policy, it is explicitly provides that pay or allow the payment of any fee, commission, incentive by any other name whatsoever for the purpose of sale, introduction, and lead generation, referring or finding to any persons or entity. Furthermore, the bank shall not pay any such incentive to any persons or entity. Case study. The grievance redressal. Scenario. A customer complains that he has missold a ULIP policy as a guaranteed return product similar to a fixed deposit. The customer has suffered a loss due to market volatility. He first approaches the branch, which is unable to resolve his complaint satisfactorily. Question. What is the multi-level grievance redressal mechanism available to the customer as per the policy? Question. Multi-level grievance redressal mechanism. First level, branches, zonal offices, CABB or TPPD at head office. Direct with manufacturer. The customer can directly approach the concerned insurer or the AMC. Regulatory portal for insurance. The customer can register the grievance directly at IRDA's Integrated Grievance Management System (IGMS) portal. Banking Ombudsman. As per the RBI's Banking Ombudsman Scheme 2006, the customer can lodge a complaint with the Ombudsman for deficiencies in the sale of insurance products by banks. Compensation. If the bank's lapse misselling is confirmed, the bank's compensation policy states that the customer will be reasonably compensated for the loss. Case study. The system integration challenge. Scenario. A customer wants to purchase a health insurance policy from Care Health via the Omni Neo app but finds the process cumbersome and the product list incomplete. He complains that the digital promise is not fully delivered. Question. Based on the policy, what is the bank's stated direct discussion regarding online integration and what steps are they taking to address such gaps? Solution. Stated directions. The policy emphasizes the need to digitize the process to fulfill regulatory requirements, IDI's ISNP guidelines, and provide ease of doing business. Steps taken. Acknowledged. Phased rollout. The bank has acknowledged the phased rollout of services on the Omni app. Current offerings. The first page specific products from partners like Sud Life, Reliance General, and Care Health are available. Future onboarding. The policy explicitly states that in the second page, products from Bajaj Allianz and more from Care Health are being onboarded. Ongoing process. The bank is in the process of implementing on leftover products through SDK integration. Action for management. The staff should inform the customer about the phased digital rollout, assured him that his feedback will be sent to TPPD for expected action, and offer to facilitate the same through the bank's display in the interim. Case study. The underperforming partner. Scenario. General Central Life Insurance Company has been a bank insurance partner for 3 years. Their performance has been consistently below the allocated business targets. Their claim settlement ratio is low, and there have been numerous customer complaints about delays in policy or servicing. Question. What is the process for the review and potential depanelment of an underperforming partner? Who has the authority for depanelment? Conclusion. Review process. Annual review. GMTPPD conducts an annual review based on parameters like business performance, claim settlement ratio, customer service quality, and grievance redressal efficiency. Call for explanation. If deficiencies are found, a formal explanation is sought from the insurer. Internal Review Committee. The committee comprising members from TPPD, IT, operations, risk, compliance, and legal reviews the insurer's reply. Recommendation. If the reply is unsatisfactory, the department recommends depanelment to the board. Authority for depanelment. The board of the bank has the authority to approve the depanelment of a tie-up partner. Case study. The incentive structure. Scenario. A group of employees questions the rationale behind the incentive for obtaining IRDAI or NISM certification, arguing that since they cannot receive direct commission, there is no point in putting in the effort to become certified. Questions. How would you, as a senior manager, motivate them by explaining the bank's policy on incentives and the importance of certification? Solution. Explanation. Regulatory mandate. Emphasize that certification is not optional but a regulatory mandate. IDI AMFI. Without certified personnel, SPGUIN holders, the bank cannot legally distribute these products. Bank's incentive. Highlight the bank's policy to motivate skill development. Composite SP, rupees 10,000 one-time incentive plus fee reimbursement. NISM certification, rupees 4,000 one-time incentive plus fee reimbursement. Renewal incentive, rupees 1,000 every 3 years for both. Career growth. Explain that being certified enhances their skill set, makes them more valuable to the bank, and opens avenues for career progression in the growing field of wealth management. Ethical practice. Reinforce that the policy of not paying direct commission ensures ethical selling practices, protects the bank's reputation, and builds long-term trust with customers. Study. The record-keeping audit. Scenario. During an internal audit, it is found that the branch has not maintained the register for complaints related to third-party products for the last 2 years. The branch manager argues that since all complaints are logged in the core system, a physical register is redundant. Question. Is the branch manager correct? What does the policy specify about record maintenance? Solution. Answer. No, the branch manager is not correct. Policy specification. The policy mandates that a corporate agent shall maintain the following records, including in electronic form. This list explicitly includes a register containing details of complaints received. The policy does not state that the core system replaces this specific register. The register, whether physical or electronic, must be maintained as a dedicated record for easy monitoring and regulatory inspection. Action. The branch must immediately start maintaining the complaint register as per the prescribed format. The records must be maintained for a minimum of 10 years. Study. The request for rebate. Scenario. High net worth customer agrees to invest a large sum in a mutual fund through the bank but demands that the relationship manager rebate a portion of the commission back to him as a discount. Question. How should the relationship manager respond? Writing the policy. Solution. Response. The relationship manager must politely but firmly decline the request. Policy justification. As per policy of the Code of Conduct for Mutual Fund Distributors explicitly states intermediaries will not rebate commission back to investors and avoid attracting clients through the temptation of rebate, gifts, etc. This is a standard industry practice to prevent unethical competition and ensure all customers are treated fairly. The study. The post-retirement policy. Scenario. An employee who is a certified specified person is due to retire in a month. He plans to join a local financial advisory firm after retirement and hopes to continue using his SP code there. Question. What is the bank's policy regarding the SP code and EUIN upon separation from the bank? Solution. As per policy, the policy is clear. Upon retirement, resignation, terminations, or leaving the bank, etc., employees are required to surrender DMAP their SP certified person code and EUIN, employee unique identification number. Action. The employee must surrender his SP code to the bank. The code is the property of the bank, the corporate agent, and is non-transferable. He cannot use it after his employment with the bank ends. If he wishes to work as an SP elsewhere, he will have to be certified under the new entity's corporate agency. Case study. The new product launch. Scenario. The tie-up partner Star Health launches a new and innovative critical illness product. The Journal APC GGAT immediately starts selling it to customers. Question. What is the internal process that must be followed before this new product can be offered to Bank of India's customers? Solution. Internal process. Approval from head of department GM prior to launch. The new product must be approved, cleared by the head of TPPD general manager. Noting to CGM. After this approval, it must be put up for noting to the chief general manager TPPD. Information to ED. Simultaneously, it should be put to the executive director for information. Rollout. Only after this clearance is obtained, the head of department general manager can roll out the product for sale. Case study. The suspicious insurer staff. Scenario. A customer reports that an individual claiming to be from Bajaj Allianz General Insurance visited his home, collected a check for the premium, and provided a temporary receipt. The check was encashed, but the customer has not received the policy document even after a month. The branch checks and finds the individual's name is not on the updated list of authorized insurance staff shared with the branch. Question. What does this incident indicate? And what is the prescribed course of action as per the policy? Solution. Indication. This is a potential case of fraud or impersonation. Prescribed action. Handling fraudulent activities. Immediate reporting. The branch must immediately report the incident to HOTPPD. Coordinate with insurer. HOTPPD will coordinate with Bajaj Alliance to investigate the individual and take corrective action as per the insurer's anti-fraud policy. Customer education. Re-educate the customer and all branch staff on the preventive measures. Never hand over checks or cash to insurer staff directly. All premiums must be routed through official bank channels, branch counters, internet banking. Verify the identity of insurer staff through the authorized list and ID cards. Red flags. This incident highlights the key red flags mentioned in the policy, non-receipt of policies, and non-verifiable insurer employee details. Thank you very much for your patience. Request for like, subscribe, and share.